Guys, it's Matt. It is actually Saturday morning, March 16th. We're going to do just a daily recap of yesterday and then a full week's recap here and kind of look under the hood on some things. So um, let's jump right into it. So yesterday, the only trade I took was JBI. I took a small loss on it, like a 0.21R loss. I'll just show you that really quick. This is what the daily candle looked like. Is you look at it and think like, how the fuck did you take a loss on that? It was one of those, as soon as I got in it, I realized like, oh, this is kind of a lower volume. It kind of like jumps around and the spread was not what I wanted. And so as soon as it started turning against me here, I was like, I'm not holding this. I wasn't comfortable in it. I didn't like it. It was one of those ones where I think if I walked away right now to go to the gym or take my dog for a walk or do anything else in life, would I be constantly worried about this trade? Um, and the answer was yeah, probably just because I didn't like the way the action was. And so I was like, all right, well, then I'm out. And I could have, had I waited and I could have gotten out here for a small win, right? But in those situations, I don't care. If I realize I've made a mistake, you just get out and deal with it. So, uh, and then if we take a look at the broader market, SPY gapped down. In fact, that gap down was just before pre-market, right? It looked like it was going to open almost flat, and then I shouldn't say just before pre-market, just before the bell in pre-market, it tanked, from the 515, 513 area here down to where it opened here in the 510s, right? So pretty significant dive there just before the bell. But it gapped down and just kind of did a big nothing burger for the day. We can look at Qs. Similar story, only closed a little lower than it opened than the SPY compared to SPY. And the IWM and MDY, kind of just a nothing day, really. Just some chop and you know sit on your hands kind of day. In fact, I after I took that one trade, I kind of walked away early because I was like, there's nothing going on here, and I can always review it later. I don't need to watch it happen in real time if I'm not interested in taking anything, right? So um, you can see Thursday, Friday, the dollar made a pretty good run and the yield as well. In fact, the yield pretty much all week, right? Um, the dollar looked a little more choppy there the early week, but the yield kind of had a nice little breakout Tuesday and then a nice little run up here till Friday. So we'll see. And we saw things fall in line with that too. The rest of the market, things that normally respond to the yield responded, and um, it was no shock, right? Let's look at what I had on my watch list going into Friday. So some of these are going to get chopped, but Lulu, which is really kind of looking more like this little box right here than it had a downtrend line sort of here for a little bit that looked like it might break out of, but it's not breaking out of there with conviction right now. What might happen is it could pull back to this downtrend line and then maybe make a breakout. Again, lines are just lines. They're just what things we draw on charts to make the price action make sense to us in a shorthand way. They're not laws by any means. The market does not have to obey this trend line that I drew by hand on this chart, right? So that's not how those things work. Net was on the watch list. That might get yanked. It's filled that gap from back in February from the earnings gap. So I don't know. I mean, again, this could act as support here, and then we could see another move up. But we'll keep an eye on it. It'll be on the master watch list, but I don't know if it'll be on my my morning watch list. Um, First watch, I still like the way this is kind of curling up there. I mean, it's not a huge mover really, but um, well, I shouldn't say that. I mean, it broke out from 21 and made a move to almost 26, right? So percentage wise, that's pretty dope. It's like what, almost 25%, something like that, 20%. So keep that on the list. This guy, I don't know, looked good there for a couple days. It's maybe giving back a little too much, but you watch how it acts around that gap area. Um, this is probably gonna get yanked. It's just been chopping for so long and hasn't, it's kind of sloppy. CRM, that gap down. So this one was, I tried to jump in on this on Thursday, right? And I took a small loss, I think. Uh, but look at the gap down, right? So this is why you obey stops, guys, because if I didn't stop out on this like I should have, and it would have stopped me. I think I stopped out for a small loss on this. In fact, we can look at it. Um, yeah, CRM was a zero point 0.5 R loss, 0.54 R loss on Thursday. Had I not done that, it probably would have stopped me out completely because I think my stop was down here before Wednesday's low, below Wednesday's low, I should say, and so it would have stopped me out fully anyway. But if you don't obey those stops, then what happens is you get a gap down the next day, right? Look, this could happen on a winner too. You could be up 1 R at the end of the day, and then it has a huge gap down the next day. I mean, it's probably less likely, um, uh, but I'd much rather take the 0.54 R loss that I took than this. I think that I calculated this as like a 0.2 R loss, right? Which is it's harder to come back from, right? It's like what 4 times the loss, right? So that sucks. Um, Okay, but CRM probably going to come off the list fast. Might keep that one on there. It's still kind of nice and tight there. I like how it's tightening up, although the big volume on that the other day, although that might have had to do with the just the market in general. IBKR, probably keep that on the list. And tap. We'll see. I don't know. It's kind of drifting down into that gap there, but after this first pullback here, and then kind of it's starting to crack there a little bit, but it recovered. So we'll see what happens there. Again, you don't have to be Nostradamus. You don't have to have a crystal ball. You just trade the price action and react to it. PLTR struggling a bit there. Spotify, I really like the way that was coiled up there, but kind of had a crappy day with the rest of everything else. TSM, just kind of keeping an eye on this more for entertainment value than anything. Carvana, I did like this one, and let's look under the hood on this one really quick. So this is what I was thinking. It was it gapped, it didn't gap down, but it made this long lower spike kind of on the in the early session, which was below the previous low. So if I'm going to get in on this at a breakout level, like let's say either I don't know, I didn't draw this line here. I drew this line up here. That's weird. It's my dog barking at neighbor dogs. Um, so I was thinking like, okay, if this does break out over yesterday's high, right at this level, man, instead of having my stop down here, now it's way down here. So it's almost like worse by the way the price action set up in the morning. The risk reward is worse than it would have been if it didn't drop like that, right? So anyway, what I was thinking is I drew a line here, and if it broke out and it came back and touched this line, maybe I'd get back in. And which happened. It just hey, relax. That is what happened. It just happened later in the morning. I was already gone. I didn't, like I said, I didn't feel like sitting around. And it didn't work out anyway. It would have rolled over on me. So um, we can just move on from that. I'll keep Carvana on the list. I mean, it is, it's still got potential there, I think. All right. So Ingersoll Rand, this is probably getting yanked off the list. I don't know. I kind of had a hard on about this for some reason. Uh, uh, yeah, I don't really love it anymore now that I'm looking at the chart, the way it's moving sideways. But JBI, this is the one I took. Did I go over this already? I took a loss on this. Yeah, and I didn't want to be in it anymore. So it's going to come off the list. In fact, we can just do that now. Uh, take that off the watch list. So there were a couple other things that I wanted to go over. These are just some things that I keep an eye on that kind of I use as like market pulse, right? The CNN fear and greed indicator. I mean, it's kind of like a easy. Just take a look at it, right? I mean, they measure some good things if you look under the hood here and see how they come up with this. And it's just a quick way to. It almost doesn't tell you really anything because it's like, oh yeah, the price has gone up a lot, so we're in extreme greed. Okay, the price has gone down a lot, so we're in extreme fear. Okay, but it's a decent indicator. Just to, again, like a overall general, where are we at? Yep. Okay. Confirming my thoughts. Cool. Also, just looking at performance here of some of the groups. So you can see yesterday, communication services had the best day, followed by energy. Then everything else was negative on the day. And those two also led the week, which is funny if you look inside the day here at communications. Let's see. The main driver of that was this Cardlytics CDLX. So it's just funny when you see something like, oh, that industry had a big day. Yeah, this stock had a big day, right? I mean, this stock went up, gapped up overnight 30%, right? Roughly a little more than that. And then made another good run there, $3 on the small price stock. It was pretty good. Had a pretty good day, right? So it was up 77%. Then you can see a couple other had green, but if you look at the overall, I mean, some had pretty big down days too, right? So it's like the whole sector really didn't wasn't a stellar performance. Um, but anyway, if you look, what I really want to point out is if you look at like the 1 day versus the 1 week and see where who's leading and who's lagging. Real estate's obviously having a tough time, but then you look at 1 month and just see that's where things start to, energy starts to fall, communications are down here on the 1 month, right? So, um, and then the farther you go back, the more you see tech, industrials, financials end up higher up on the list, right? Tech specifically. You see communications there on the 1 year. That's pretty cool. But anyway, you just kind of see like that. That to me tells you like, okay, things are rotating around, right? It's not just big tech carrying the flag anymore and pulling the whole market up with it. Like things are kind of moving lately, and it's just something to be aware of as you're trying to navigate what's going on. Got some earnings coming up next week. I mean, nothing crazy Monday that I can see there really quick on a quick glance. And then this is our the economic reports and stuff. So home builders on Monday, housing starts Tuesday, and then FOMC Wednesday. That's going to probably be the big one, right? Because with the interest rates coming in, or sorry, inflation coming in a little hotter than expected, I think. So we'll see what happens with the announcement there. Probably won't be opening new trades Wednesday unless they really look good, and by the time 2 o'clock rolls around, they are uh, solidly in the money. So we'll see. It's just something to be mindful of. There's always a pretty big reaction to that. So, okay, one other thing I wanted to go over just for giggles. So this is my spreadsheet that I track everything on. So these are all my trades. You can see March starts here. The month to date for March right now, I'm up 4.14R. Um, and then this week alone was 2.76R. And that was really all this Microsoft trade, right? I mean, as far as the trades, the small win on mRNA, losses then, a loss on Microsoft and Dell, this Microsoft loss and then this win was those entries were the same day, and then so I stopped out the first time and then got back in and ended up being a big winner for the week. Small win on AFRM there, and then a couple of small losses the rest of the week. So 2.76R on the week, I'll take it. We're positive, we're making money. And then, right, it all depends on what your R level is, right? For small accounts, an R level could be $10 or $100, and for really big accounts, maybe it's $10,000 or more, right? Who knows? Who knows what your R is? It doesn't really matter. It matters what your R multiple is if you've got a profitable system or not. So, yeah. Anyway, I think that's all I wanted to cover. Uh, this for this week. And yeah, well, we're gonna have a psychology video coming out pretty soon.